Currently, we are being bombarded by the media about the latest crisis du jour, the so-called fiscal cliff. Many of you may be wondering what exactly the fiscal cliff is and how is it going to affect your investments. Well, the fiscal cliff is a combination of tax increases and spending cuts scheduled to take place at year-end. The common belief is that unless addressed quickly, this fiscal cliff issue virtually assures the U.S. economy will fall back into another recession next year. Obviously, this would be very bad for stock investors. In recent weeks, investors have been fearful as stock prices have moved lower in reaction to this economic uncertainty. Few believe that U.S. politicians will work together to come up with a plan to soften the impact of the fiscal cliff. We suspect investor fear will continue to rise as the two parties negotiate a compromise. Headline news and leaks surrounding negotiations will likely trigger short-term market gyrations both up and down in the next few weeks. But in the end, we expect to see a reasonable resolution to the fiscal cliff, and worries will eventually dissipate. Our best assessment for the economic landscape, rather than a cliff, is actually a bunny ski slope, a much gentler but still slippery journey. We do not expect a traumatic fiscal cliff. We do see baby steps toward fiscal restraint, the combination of tax increases and phased-in spending cuts. Fiscal cliff? Not so much. Fiscal restraint? Yes, indeed. In our October quarterly newsletter, we stated, quote, current investor psychology readings advise us to expect a pullback or sideways market for stocks. Investor fear of the fiscal cliff has indeed created that market pullback. In fact, the sharp decline from recent highs has shifted investor psychology almost 180 degrees from complacency back towards fear and concern. The result is much of the risks have already been priced into the market, and we believe good investment opportunities are developing. We do expect the stock market to head higher still, and in spite of today's overblown fears on the fiscal cliff, we still expect to achieve even higher prices in early 2013.